Any discussion?
Well, Trustee Daly would like for myself to go through the annual treasure or financial report for the board, highlight some different areas in that, so I'd like to take the time right now to go through that.
Okay.
I will be discussing the annual financial report and also the report of internal controls. The annual financial report was prepared by Wolf & Company, who is the village's auditors. They were back out here back in June this past year. After my presentation, the vote can take place. The vote is only needed on the annual financial report. It's not needed on the internal control report. The internal control report is for our village to look at, see what we need to do to strengthen up our internal controls, to prevent fraud, many different areas for that, just to tighten things up, make things run smoother, communication, etc. So the auditors examined our books back in June, as I discussed, and in their opinion letter in the beginning of the audit, basically states that they're not there to give an opinion, yes or no, this is good. They just have to look at what procedures we have in place and how it compared to all the financial records from the past fiscal year. And from that, they say everything was fairly stated. So there's, in the beginning of it, it gives a big long letter about that. Moving on to page 7, shows changes in net assets. There's a chart here called changes in net assets. Net assets basically are what is left after deduction of all liabilities. You are left then with your net assets. A few financial highlights on this chart of the change in net assets. The first area we'll discuss is the governmental activities. You'll see the revenues and the expenditures. The revenues roughly total $1.575 million, with revenue receipt increases from the fiscal year 2011, shown in state income taxes, sales taxes, and then the revenue decreases from the prior fiscal year were shown in property taxes, utility taxes, which are electric and gas taxes, and also franchise fee taxes, which consist of like our Comcast cable franchise fee agreement. That's where the franchise taxes fall into. Also, a decrease was shown in the telecommunications tax. The estimate of revenue that the village passed at last year for that fiscal year was actually less than the revenues that the village received. It's a good thing. The village was low on their forecast. We didn't want to overinflate the revenues, and whatever we got over, great. We could use it for unforeseen items that happened within the fiscal year. And that actually was under budgeted by $134,000. The expenditures roughly totaled $1.298 million for the fiscal year ending 2012, compared to $1.497 million in the fiscal year 2011. The $199,000 reduction in spending was due to reducing expenses in many areas across the board, but also keep in mind that in fiscal year 2011, the village financed the Public Works building next door. That financing happened in 2011, inflating the expenses compared to this year. Even though the village reduced its spending in the fiscal year, the village's actual expenditures were $17,843, or 1% more than what was budgeted for. The primary expenditure budget variances were in contractual services, which are engineering fees, legal fees, and also the completion of the bike trail. Moving over to the next column, which is the business type activities. Here you will find the Public Works Water and Sewer Fund, also called the Proprietary Fund. The revenues totaled roughly $1.088 million compared to $885,000 in the prior fiscal year. The increase of approximately $203,000 was partly due to moving all the cell tower franchise revenues we used to receive it all in general fund, but we decided to move it into the Public Works Fund to help support payments for the Public Works building. And we also collected $27,500 from FEMA for the large snow disaster back in February 2011. So that, again, inflates the revenues. The expenditures roughly totaled $1.024 million compared to $1.132 million in fiscal year 2011. The reduction in spending was due to a variety of projects performed in fiscal year 2011, but not needed in fiscal year 2012. Some projects included catch basin maintenance, street light repairs, storm sewer, water detention restoration. Also to note, in fiscal year 2011, the village spent $150,000 just in snow plowing alone, compared to spending $42,000 in the fiscal year 2012. Again, due to the snow emergency that we had. The motor fuel tax fund, which is a restricted fund, restricted meaning that monies received may be expended only for specific projects that have been approved by Illinois Department of Transportation. This fund showed an end-of-year balance increase of $25,000 due to projects completed during that fiscal year that were less than the revenue we received in that fiscal year. At the end of fiscal year 2012, the village is able to report positive balances and increase of net assets in each of the funds, being the general, the public works fund, and the motor fuel tax funds. As of April 30th, 2012, the village had long-term debts and loans payable of $644,000 roughly. The debt consists of the bank note payable for the public works building, along with the IEPA loan portion at this point of this fiscal year. At that point, we received $88,949, so we had to show that in that fiscal year. More of that information is filed on page 12 within the annual financial report. Within the audit, pages 13 through 24, these are all the different basic financial statements. These statements show the statement of net assets for all the funds. You'll find statement of activities, which are expenses and charges for services for the funds. You will also see statements of revenues and expenditures and a statement of cash flow. Again, everything is broken down per fund. They'll show you revenues and that. These are really good tools to use. Look at the line items, what it represents. Moving over to some notes of the financial statements within here, which the notes start on page 25. The police department disbanded within the fiscal year 2011, and with this audit, the police protection fund was moved back to within the general fund. Prior, when we had our own police department, we set up a separate fund, and thus causing at those end of those fiscal years to show that it was it exceeded the expenses because we needed money out of the general fund. Now it's all moved into the one underneath general fund. We don't have our own police department, it belongs back into the general fund. Another note within the financial statements is the Rubloff Economic Development Agreement entered in 2003. The agreement is that the village remits back to the retail establishment 50% of the sales tax revenue, of sales tax receipts collected by the establishment, which right now is the Walgreens department area. The agreement will terminate upon payment of the sum of $300,000 or 10 years from the date the store opened. The store opened in February 2005. To date, we paid back to them $209,886. In 2015, February 2015, I don't know if we'll make it that far. I really feel we'll come to that $300,000 prior to the end of the date, which means once that's satisfied, we don't have to remit back 50% of sales tax revenue for that development. Another note to add in the financial statements is that the intergovernmental agreement entered with the School District 46 has a credit balance of $50,617. This agreement was placed back when the Prairie View School was built, and there was a property on that that was undesirable property needed to clear up. So the village and the school district made an agreement together to waive and abate water fees, water usage, up until that $170,000 credit. Basically, we paid $50,000. There's no time limit. Once we match it, then that will go away. then we will start charging for the water service provided for that area. As we all know, the village entered into the contract with the Village of Grays Lake Police back in July 2010 for a 3-year period. The agreement automatically renews at the end of the initial term for an additional 3-year term. More to that is on page 39. I'm only highlighting a few of the important stuff to keep in mind what our forecasting will be needed. Moving past that, the final pages of the audit shows different schedules, starting like on page 40, and then you'll see different pages to split out the other schedules. But the final pages of the audit show schedules of revenue and expenditures for the general fund, comparing what was budgeted and what was really received or spent. The next schedule found after the non-major page fund shows the schedule of revenues, expenditures, and changes in fund balance for the motor fuel tax. Please note that the ending balance shows an increase from the beginning balance. The Public Works combined schedule is next, also showing a breakdown of revenues and expenditures for streets and sanitation, water and sewer, areas along with changes in net assets. Again, an increase in net assets. The very last 2 pages of the audit, very last 2, is a history of the last 10 tax levy years. The tax rates are listed, what was extended to the village, and extended to the village means what we were allotted to receive due to all our calculations. Please note that the last 3 tax years have shown a decrease in property tax revenue paid to us, the village, and the decrease was due to the village's board's action of reducing the total dollar amount needed for those years in the village's tax levy. The board chose to reduce the burden on the residents. That concludes the audit. There's much more information within here. Trustee Daly and myself pulled out what we felt was very important. Try to walk you through, get more comfortable about the audit. Does anyone have any questions that I can try to answer? If there's no questions, I need approval.
By the time we absorb it all, we can call Kelly.
Okay. I'll hear from you next.
We have a motion and a second though, so roll call.
Trustees Crease.
Aye.
Duberstein. Aye. Barrett.
Aye.
Daly.
Aye.
And Washington.
Aye.
Motion carried.
And then we'll give the floor back to Kelly. She's going to do a presentation of the report of internal control.
Bear with me.
Absolutely.
Again, the report of internal control was prepared by the auditors. During their audit, they found some areas that the village will need to tweak and for safeguarding purposes, and really good information that comes out from it. On page 2, the first area listed is material weaknesses. Item 1 is segregation of duties. Due to the village's limited size, this prevents a certain level of segregation of accounting details. This comment is repeated from last year. We had a few items addressed, but we still have a few more items to continue to address. One of the original items was myself. I would enter all the invoices, put the bills payable for the board packet, produce the checks, sign the checks, have the other authorized signature, sign the checks. After they were all approved from the board, I would then take the check, reconcile it with the invoice, match it up, mail it out, file the invoice. One person having that total control, there's such a great area that fraud can take place. So what we have done in this past couple of fiscal years is I input the invoices, I submit for the bills payable report. Once it's, I print the checks. Once the board approves the bill payable report, the next day the deputy clerk takes all the checks, all the invoices, and takes the back end of it. Matches anything, if there's any discrepancies, brings it to our attention. So that's a big area. We're still trying to tweak some more items out of that. But that's a work in process. Another area that changed to help prevent fraud was that I implemented the signing off of a journal entry form. Each month I have some journal adjusting entries on these forms.